My name is Nurin Batrisha Binti Larzau. My matrix number is 01DKB21F1040. Assalamualaikum and hi. Today my group of members and I would like to explain about the book of parliamentary. What is the book of parliamentary? This is where the transactions that are made by a business are recorded for the first time before they are entered into the separate ledger accounts for goods purchased on credit by business and are now being returned to the suppliers. These books of parliamentary are separated into 5. First, the sales journal. This is used when a business has a lot of separate sale transactions in this journal. The total is then entered into the ledger accounts. The common use of this journal is to record credit sales from invoices issued. Second, purchase journal. This journal lists the transactions for credit purchases from the invoice that are received. At the end of the day, week or month, the total is transferred to the purchase account. Third, returns journal. This one are divided by 2, which is sales returns or returns inward journal, used for goods previously sold on a credit and are being returned to the business by customer. Purchase returns or returns our journal, used for goods purchased on credit by the business and is now being returned to the suppliers. 4. Cash book. The cash book is used for both the cash account and bank account. And last but not least, general journal. The general journal is where the transactions that are made by the business are entered. This is recorded chronologically, showing an explanation of the transaction, which account is affected, the amount, and whether those accounts are increased or decreased.
Okay, so hi everyone and Assalamualaikum. My name is Zarin Ichuganti Zamani from DKB2K2. My matrix number is 01DKB21F1039. So guys, I will start with the purchases journal. So what is actually purchase journal? Purchase journal is a special journal used by business to record all the credit purchases, which is also known as the purchases book and purchase day book. These purchase journal are provided by the seller to customer. Then, when a transaction to purchase goods on credit is done, the expenses account is debit and the liabilities account is credit. Okay, I will give you guys some example, which is when merchandise and their invoice are received from supplier, a responsible personnel from receiving department will compare them with the copy of the order placed by the purchase department. If quantity and quality of merchandise conform to the order, the merchandise are accepted and transferred to the warehouse. And then after it, an entry is immediately made in the purchases journal on the basis of information obtained from the invoice that are provided by the seller. Okay, so guys, let's move to the format of purchases journal and purchase invoice. Actually, the invoice provided by the supplier or seller is known as the purchase invoice or inward invoice. It usually provides the following information, which is include the invoice number for the goods purchased, the date on which the invoice is prepared, the name, address, email, and also phone number of both buyer and seller. A proper description of merchandise like quantity, quality, weights, and total amount of the merchandise purchases. And last but not least, must have the details about the terms and conditions of the invoice. Okay, so guys, I will move to the sales journal. So what is actually sales journal? Sales journal is a special journal that is used to record all credit sales. Every transaction that is entered in sales journal will essentially result in a debit account receivable and a credit to sales account. And then this will issued by supplier to customer. Here, the term sales refers to the sale of only those goods or merchandise in which the business normally deals. The sale of used or outdated assets such as old plant, machinery, equipment, and newspapers. Okay, so I will give you guys some example, which is when the one seller sold a merchandise on credit, he will prepare an invoice known as sales invoice or outward invoice. So this invoice will send to the customer usually along with the merchandise or the inventory. Seller also will prepare a duplicate copy of sales invoice. This duplicate copy is kept by the seller with him because the entry in the sales journal is made on the basis of it. Okay, so just like I told you guys before, at the purchase journal, you may have noticed or heard that I have told the sales invoice and purchase invoice are two different names of the same document. It is always prepared by the seller and is called sales invoice in the record of the seller and purchase invoice in the record of the buyer. The seller will use it to record all sales transactions in the sales journal, and the buyer will use it to record a purchase transaction in the purchase journal. So here are some formats that include the sales journal. The first one is date. So this column is used to record date on which the sale is made. So normally it is the same date as written on the invoice. The second one is account debit. So this column is commonly used to enter the name of customers whose individual accounts are maintained in account receivable, subsidiary ledger. And thirdly, invoice number. So the sales invoice number is written in this column. The fourth is cost of goods sold and inventory. In this column, the cost price of the merchandise sold is entered. In general ledger, the cost of goods sold account is debit and inventory account is credit by the total of this column.
So hi everyone, so my name is Nur Ananabila binti Ma'azizi and my meter number is 0121@907. So today I would like to speak about written inward journal and written outward journal. So let's start with written inward journal, which also known as sales written journal, is used to record the customer return of goods to the business entity. And why customer want to return the goods back? Here is some reason on why they choose to do that. So first of all, maybe the reason might be they got unsatisfactory item, wrong sizes, wrong item, and maybe have defect on it. So for information, the source document for the written inward is credit notes. And written inward also hold the debit balance and is placed on the debit side of the child balance. So here I will tell you on how to make a written inward journal. So for information, there are several important things that you have to state in journal in order to complete your written inward journal. First thing first, you have to mention the title of the journal, which is written inward journal. And in the first column, you have to state the date, followed by the detail, the number, follow, and amount. And also, you have to mention the things you have done that day, such as transferred to the written inward journal. So let's continue with written outward journal. So written outward journal is also known as purchase written journal, and it used to record the return of goods by an organization or by the seller to the supplier. And why written outward happen? So when the seller purchased the good from the supplier and find it unsatisfactory, so of course they choose to return it back. So outward return reduce the total account payable for a business. And same like the written inward, the source document for the written outward is credit notes. And written outward hold credit balance and is placed on the credit side of the child balance. Same with the written inward journal, written outward journal also have several important things that you have to state in order to complete it. So first I will start with mention the title of the journal, which is written outward journal, followed by the date, the details, the note number, folio, and amount. And same like the written inward, you have to mention the date you have done that day, which is transferred to the written outward account.
Alright, I will be continue with cash book. The definition of cash book is a subsidiary book in which both cash and bank transactions are maintained. A cash book is both a journal and a ledger. For a detailed explanation, both cash receipts and cash payments are recorded in a cash book. The cash book is also regularly reconciled with the bank statements as an internal adapting measure. Cash books are important because their proper maintenance and reconciliation with bank statements are fundamental for a business. Some businesses maintain cash book instead of cash receipt journal and cash payment journals. This is because all cash receipts and payments are recorded in a cash book. The cash book is maintained in the form of a ledger account, where receipts are put on the debit side and payments on the credit side. Types of cash book: 1. Single column cash book. 2. Double column of cash book. 3. Three-column cash book. The advantage of cash book is in almost all businesses, most transactions are related to the cash receipts and payments, and the cash book is a book of the original record and the part of the ledger. Alright, what is a single column cash book? The single column cash book resembles a T-shaped cash account in almost all respects. The pages of this book are vertically divided into two equal parts. The receipts are entered on the left, debit side. Payments are entered on the right, credit side. A single column cash book has only one money column on the debit and credit sides to record cash transactions. This is the reason why it is called a single column cash book or a simple cash book. Alright, we will be moving on to the next part, which is a double column cash book. A double column cash book, also known as two-column cash book, consists of two columns on each side to record cash and bank transactions. Rather than separating cash and bank accounts, a double column cash book enables accountants to maintain the two accounts side by side. This allows for greater convenience when recording transactions. In particular, we can quickly see overall the balances simply by adding a bank column to both sides of a single column cash book. We can turn it into a double column cash book. The advantages of double column cash book are compared to single column cash books. Its convenience, cash and bank accounts are kept side by side in one place. Cost and time effective because no separate bank account needs to be maintained. And for the format of double column cash book, the format of double column cash book is similar to a single column cash book. The exception is that an additional column is included on both sides to record cash discount. Alright, last but not least, three-column cash book. What is three-column cash book? A cash book with three columns for discount received and paid, cash transactions, and bank transactions is known as a three-column cash book. A three-column cash book, also known as a triple-column cash book. It contains three money columns on both the debit and credit sides, one of each side for recording discount, cash and bank amounts. If a business holds a bank account frequently makes receipts and payments through that bank account, then it is useful to maintain a three-column cash book rather than a single or double-column cash book. It is customary for businesses to allow discounts for early payments. For example, if cash is paid early, creditors may receive a discount. On the other hand, if debtors are paid early, a discount may be allowed to them. In a three-column cash book, three columns are provided to the amounts of each side. One column records cash receipts and payments, the second records banking transactions, and the third records discount received and allowed. The format of a three-column cash book is similar to that of a two-column cash book, except that a column is added in a three-column cash book to account for bank-related transactions.
Hi everyone, my name is Nur Hafizah binti Ahmad. My matrix number is 01DKB21F1041. Today, I would like to talk about General Journal. The General Journal is the book that entity first record all of the daily financial transactions in it. It is also called a book of original entries because all of the transactions are recorded in this book before moving to other books. The entity also records other non-financial transactions that occur in the business into this book also. That non-financial transactions included depreciation, adjustment as well as accrual. Those financial transactions including sales transaction, purchase transaction, cash receipt, cash payment, and many others important financial transactions. Journal entries are the first step in the accounting circles where an accountant or bookkeeper analyze that business transactions that occur every day in the business and then recorded a journal entry on the journal. Sometimes the journal is called the book of original entries. This is because all of this book initially record all of the business financial transaction before moving to other books. Format journal. As you can see in the journal template, the key information that should be included at the top is the name of the entity and the period that the journal is recording. In the detail of the journal, key information that should be included is a line of the journal date of the transaction, name of account, and description of transaction. Additional information that should be included is a reference and more importantly is debit and credit. This is the key information that should be included in the journal format, and there may be different in the format depending on the entity management decision. Simply define, the journal refers to a book of original entries in which accountants and bookkeeper record raw business transaction in order according to the date event occur. A journal is the first place where data is recorded, and every page in the item feature dividing columns for date, serial number, as well as debit or credit records. Some organizations keep specialized journals such as purchase journals or sales journals that only record specific type of transaction. Once the transaction is recorded in a journal, the amount are then posted to the appropriate account such as accounting receivable, equipment, and cash transaction. The conclusion is the book of prime entry is very important because entry recorded in the journal are supported by a note term as narration, which is a brief explanation of the transaction for the proper understanding of the entry. One can know the correctness of the entry through this narration. Not only that, it's record transaction as and when it happened, so it is possible to get a detailed day-to-day information. Thanks for watching.